Уважаемые коллеги, добрый день.
Distinguished colleagues, good afternoon. We start our conference titled Challenges and Prospects of Economic Policies in 2021-2022. I hope everybody is well connected, or some of us are still joining in the forthcoming minutes. For a start, to kick off the conference, I'd like to give the floor for introduction to Rector of the RENIPA, Mr. Vladimir Mao. Very good afternoon, dear colleagues. I'm pleased to welcome all of you at this International Scientific Conference. It is the third conference of that kind, and this time is dedicated to projections and challenges of the economic development in the forthcoming year or two. I am so pleased to have some macroeconomic people on board and international partners of ours, including Mr. Sirati and Mr. Kotlikov. I'm so glad that we have the colleagues from the regional branches of RENIPA on the line. And we advocate for a single scientific and educational space in the framework of the 2030 educational strategy. And we have one of the strategic projects that is related to transforming the consulting and business advisory inputs into educational and academic outputs for the regional branches of ours. So anyway, a warm welcome to everyone. Thank you very much for being with us. I hope we'll have a fruitful discussion today, and I'll be looking forward to the outcomes. And we have Mr. Drobyshavsky on board, which is also a very good thing. Well, thank you very much, Mr. Mao. Distinguished colleagues, we begin the session, and a few words at the outset about the technicalities. We are having simultaneous interpretation. Jose, hello.
I hope you hear us, and you can turn on interpretation. There is an interpretation button, and you can turn it on to hear us and understand what we are talking about. Коллеги, у нас будет 4
выступления. We'll have 4 speakers in the first session, so I would ask the speakers to be confined within the time limits of no more than 20 to 25 minutes for each of the speakers. And with respect to all the listeners and external staff, I want to tell you that you can leave your questions by the chat box. You can submit your questions, and I will voice these questions for the speakers, and to the speakers rather. For a start, I would like to announce the A panel on the projections of the global and Russian economic development, the economic outlooks. We all know that the uncertainty is now very high, and it is very hard to project anything. Anyway, it's hard to make projections, but in the current context, we have the additional difficulties with respect to the COVID pandemic and the scale and the scope of the macroeconomic measures and incentives worldwide to prop up the economy and all the global developments that we have seen. So as a result of our discussion, would like to either unfortunately, I have had a disconnection. I got disconnected, I dropped out, but hopefully that now you can hear me again. Yes, we can hear you. All of a sudden, my Zoom connection failed, but now I'm on the line. So I hope that as a result of today's meeting and teleconference, we will outline the projections for the global and Russian economic development for the forthcoming future. And the first to speak would be Mr. Jose Siavaserati. Invite him to speak. He's our colleague on the G20 format of ours just last week. And now the Research Centers Forum of G20 was held online, and the issues of the global economic development and challenges of the global economic development were on the agenda. Jose, I'd like to hand over to you. Please provide your perspective of what challenges the global economy will be facing in the near future, and most importantly, what shall be the challenges for the emerging markets, such as Russia and Argentina, because we can see that in the past months, the recovery of the global economy has slowed down, and it's quite uneven anyway, and probably the economic development in future will be patchy with ups and downs. What is your take? What shall the future hold for emerging markets and the rest of the global economy?
Okay, thank you. Thank you for the presentation. It's a pleasure to see Pavel and Sergey, old friends of mine, again. I would like to start saying that the pandemic was a huge surprise. And now that we have the benefit of time, we might say that the world has been able to cope with the pandemic in a rather successful way. You might compare this crisis with a great financial crisis, with a great recession. That is a crisis that erupted with a subprime mortgage crisis and the real estate crisis in the US and the collapse of Lehman Brothers. And that in economic terms was a lesser crisis, was not so tough. Sincerely, never before the world economy has suffered such a sudden blow as the pandemic crisis. Only in the US in April 2020, the labor market lost almost 14% of all their employment in just a single month. And if you compare that with the Great Depression of the 20s and 30s, it took more than a year, almost a year and a half, for the Great Depression to cause the same damage in the labor market. So I would start with a note of with a positive stance initially, saying that the world has been able to cope with this. This is not a black swan. This was a crisis that was expected. We never knew when it would come, but we knew that we would have to face a pandemic. The World Health Organization said in 2004 that the pandemic was inevitable. So the world was not prepared for the pandemic. And I would say in a very short time span, it was able to leave a recession behind. In the US, it was a 2-month recession, very deep, all of a sudden. But the recession started in February and the economy was growing again in May. And in most of the world, the facts are that the recession was left behind. I would say the tougher part of the recession was left behind, and recovery started. Obviously, we are not yet in many parts of the world, for example, in Argentina, near the levels of the pre-pandemic. But compared with the Lehman crisis, I think this response was more skillful. We have no credit crisis, no credit crunch, no banking crisis relative to Lehman, despite of the huge blow, which is a merit. I would say it is a merit of the changes the financial system made after the Lehman crisis. So, and I think the most spectacular thing was the velocity that the world took to develop vaccinations. Not only one vaccine, but plenty of them, and very successful. And I would add, there's a positive view in financial markets in the sense that in August 2020, when the vaccine was a promise and not a reality, stock markets surpassed their previous records. So there are many things to congratulate ourselves. And that's the good part, I would say. We should take that as I would say, as a stimulus to go on trying to solve many, many problems the pandemic created, and many other problems that were existent prior to the pandemics that will deepen and make our life worse if we do not find the proper solutions. So that's the starting point. I would say now we take the recovery for granted. The recovery is proceeding at a 2 velocity, I would say. Advanced economies are finding easier to get out from this trap. Emerging economies are finding it more difficult. Lower income, less developed economies maybe are the toughest hit by this crisis. And I would say almost every time they have that position. I think access to vaccination and to very good health system is key to recovery. I would say that an economy that has access to financial markets are finding it easier to escape. There was no banking crisis, there was not credit crisis, and that made a huge difference, because when you have a financial crisis, recovery is always slower and difficult. So in that sense, for example, Argentina, that's not having access to financial markets, it's finding that the way out, it might take longer, than other Latin American countries that have, for example, sovereign risks levels that are relatively low, and they have found a lot of financing impressively, because you did not expect when the crisis erupted that there would be extra financing and not a credit crunch as it happened in Lehman. So I think the recovery for the world is a fact. It's proceeding very fastly, but the truth is that the velocity is not the same for everyone. We are not talking of catch-up or convergence or even of emerging countries, except China and India, I would say, growing faster than advanced economies, which is a fact. In the 90s, or even in the Lehman crisis, which was a crisis of advanced economies, emerging market economies were a kind of extra engine for growth. This is not the case right now. And we are in many countries facing still a lot of difficult challenges ahead. I would say debt is a challenge for heavily indebted countries. And there has been some progress in the G20, in the common framework, and trying to figure out solutions out of debt. I would say that Ecuador and Argentina restructured debt, sovereign debt, with private creditors during the pandemic, and that was feasible without huge stress, but many things are still pending. I would put a lot of stress on the social and political front, because social and political stability would be key in order to recover the pre-pandemic income per head levels, which would be very difficult in the case that political and social instability take control of the situation. In that sense, I would say the reality is proven more benign than what we expected, fortunately. And we also mentioned that it's quite clear that advanced economies are spending more to fix the problems attached with the pandemic, that middle-income countries, which are still spending some money, but they do not have the same fiscal room to maneuver. And less developed countries, I think they are having a tough moments, and I guess the G20 and the international organisms have to put the accent in trying to solve the situation and provide more financing, more vaccination. Health is a priority still now, even for economic policy, in the sense that we are facing a supply shock, and good public health is the key in order to lower the impact of bad outcomes attached with the health crisis. So I do not know if my time is, if I use all my time, but making a summary of what I think the world has coped with the crisis in a better way than expected ex ante, or when the crisis erupted. And that involves not only economic policy, but also health, and I would say, incredibly, the ability of humankind of solving for the first time a pandemic with a new vaccine and treatments and tests that were able to cope with the pandemic while the pandemic was still alive. This is the first time it happened in the history of the world. And we have not seen the stability and the social and political stability that we faced in similar crises in the past, which is another plus. And I would say financial markets, which are in a sense a kind of guidance, or they provide a view towards the future. I would say financial markets are also very supportive of a positive final horizon. Even for emerging countries, I would say the lower income countries are in a tougher situation, and that's very much linked with the fact that they have not been able to vaccinate much of the population, and if your population is unhealthy, the economic system will be facing in the future, I think, very difficult moments in order to recover fully. That's my point. I would stress the fact that this time we have no financial crisis, no credit contraction at a huge level. We were expecting a kind of a COVID sovereign debt bomb. If you think again what happened to many countries which were forced to enter quarantine, to stop exporting their products, to face even negative prices briefly for oil exports or for many of their exports, less lower levels of capital flows or capital outflows. It's a kind of miracle that we have escaped and been able to take this evacuation route. That it's tough, it has destroyed a lot of companies and has affected the private sector, but nonetheless, almost every economy is rebounding strongly. So that's my take for as a starter, I would say.
Да, большое спасибо, Хосе. Достаточно
Thank you very
оптимистично.
much, Jose, for your upbeat presentation and intervention. I really think that at the start of the pandemic, no one expected the recovery to be so swift.
No.
Anyway,
Сопряжены с
so I
таким.
would ask some of the things related to this speedy recovery. The opportunity of recovery that quickly has happened because of the lax and lenient fiscal and monetary policies and support measures and incentives from the governments. And we're now seeing that the inflation worldwide is speeding up.
Is this a question?
Такому восстановлению.
And the inflation has become possible thanks to the speedy recovery, and the Fed and ECB have been trying to persuade everybody that the inflation is temporary and transitional and is gonna slow down next year. So what is your take on that? Do you believe that it's a temporary thing and that globally inflation is not a threat for the recovery? Because if it's going to be a lengthy spate of inflation at a high rate, the central banks will have to tighten the monetary policies that will impact the emerging markets, and they will cause an outflow of capital and will entail all the problems that we expected at the start of the pandemic eventually. Can you comment on that?
Well, I think economic policy learned a lot after the Lehman crisis. And it learned the good things, and also it became more aggressive, because I think policymakers now think that they were too shy after the Lehman crisis, and they cut off stimulus too early, which is something that you might argue it's not that way. And I think this was a kind of a policy experiment, especially when the Biden administration got approval from Congress of an extra fiscal package, that it was very clearly a pro-cyclical fiscal policy. So I think the initial response was swift. There was no much cooperation as coordination. I think the virus, as it attacked everyone, forced that coordination. So everybody responded in the same way, and the effects were positively correlated. I think the Biden administration took an extra step, and that extra step had a different impacts in the global economy. For the US, it's okay. For many other countries, it might, I would say, install the suspicious of maybe future capital outflows or a crowding out of long-term interest rates rising, and that translates in reality. If you look at what happened, the package was approved by mid-March, and that was the date around March, late March or early April, when many countries, for example, Russia, Brazil, etc., had to raise their own domestic interest rate. So stimulus for the US or for the advanced economies can translate into a risk, and local authorities might have to stop their relaxed policies and turn into preemptively into tough policies. So at that stance, you don't have the same favorable effects for everybody, but now you start having second effects that are undesirable and might hurt some countries. For example, Turkey was not so willing to raise rates, and that bought Turkey an extra boot of instability in the currency markets and local markets. So the fact is that interest rates rose because of these strong, very strong, extreme stimulus policy in the first quarter in the US, but then interest rates went down. So that gave an extra time for emerging markets. So that is what I think. And emerging markets should not waste these extra time. I think countries that have reacted preemptively, they are investing in the future, in the sense that if in the future interest rates go up in the US because of inflation or other phenomenon, you have at least proven your credentials that you will be working toughly in order to keep your house in order. But I think that's one of the challenges ahead. If emerging markets go in another rhythm, if they lagged in terms of growth with the global markets, eventually global markets will push higher interest rates or a different economic climate, and that might translate into a negative impact into emerging markets. In reference with the inflation question, I would say in the US, this was an experiment, and this was a test. How resilient is the inflation? I would say not only the inflation data, but inflation expectations in the US. And if you take a careful look at the numbers in the US, you will find that average inflation has gone up a lot, but median inflation has stayed the course and have risen very, very little. So you have in the extremes, in the tail of the distribution, a huge increase in prices in, I would say, 5-7% of the consumption basket. The median has not been affected, which is a very strong outcome, and it reveals that inflation is very well anchored and the regime is credible. But nonetheless, you are facing a prolonged period, I would say, of supply bottlenecks. The labor force is recovering very slowly. Now in the US, I am now in Miami. The sign that you most see is a sign that says now hiring everywhere, apart from the name of the streets. The second sign you find is now hiring. And when you ask, they pay you a bonus if you want to work there. They are paying above the average wage, but they are not able to get the people they need. So I think there have been no inflation if you are orthodox in the sense that you define inflation as a generalized increase and sustained increase in the general level of prices, which is a positive surprise, but you will be under stress for a long period. As long as the median is not moving, I would say it is still below the levels the median inflation had 2 or 3 years ago, when the median inflation reached 3% in the US, while the average inflation was unable to reach 2%. So that would be compatible, in my sense, with stability. And I think that shows that you have facing a temporary shock. And for the US, I think they might be able, if expectations get anchored and stay anchored, that will work well for the US. Every measure of expectation that is connected with market prices, so the expectations you derive from the prices of bonds, think that a US Treasury bond is a fixed rate payer. You have no protection if your estimate of inflation proves wrong, and that could be devastating in a 10-year bond or 30-year bond. Those bonds, the full curve is transacting below 2% or 2.1%. That's below, I would say it's less than half the headline inflation number. So in that sense, the system is very well anchored. But that same shock goes beyond the frontiers of the US and hurts the world. And the world might not be so well anchored as the US. So in that sense, I mentioned many countries have to tighten their own policies because of that international price shock. So I would guess in some countries, in some places, inflation might get up, get unanchored, and become a persistent problem, or require a persistent, clear, specific solution. If you just look at headlines, I think headline inflation would be very high for the whole of this year for the global economy. It might come down a little bit. I still suppose, I still think it might come below this year level next year. And in 2 years, that we will have a definite answer to your question, if inflation has become a new problem or not. For the sake of being complete, I would say I do not believe in stagflation either in the US. They have recovered faster than in any time. The economy was above the pre-pandemic levels at the end of June, and the unemployment levels are now 3.3% below the levels of employment prior to pandemic. So that's not a stagnated economy by any means. It might become a threat in the future, but I think the threat was bigger, way bigger when the pandemic started. So I would sign these challenges for advanced economies. I think advanced economies are okay. For emerging will be tougher. For lower income countries, if they do not resolve the health problems, it might become a serious crisis. I would say that in 2011, it should have been an emerging market crisis, which didn't happen. It's a missing crisis. And now the pandemic, it's the same. This is the second missing crisis for emerging markets, though I think we are still in the course of this process, so it's too early to be too confident. But I think, as I started saying, we might be positive while realistic and responsive, but we might be positive because the world has proven that it has the instinct, the ability, and the willingness to survive, I would say.
Да, спасибо большое, спасибо, Хосе.
Well, thank you, Jose. Thank you for your contribution. Perhaps, colleagues, we can come to the next presentation. And the next presentation is from Sergei Drobyshevsky, director of one of the departments of Gaider Institute. And Sergei, what do you think? How optimistic are you about the developments in the global economy? Thank you, Pavel. I hope that you can see my presentation on screen. Yes, we do see it. Again, thank you for this invitation to speak at this conference, and thank you to Jose for a very interesting push and impetus that he provided to this conference. And I hope that my presentation is going to probably develop and continue some of the points raised by Jose when he was talking about some things of quality. I will be showing numbers of quantity, if you like, and where Jose was recalling some numbers, I would probably be providing some considerations of my own about how the global economy is going to evolve. So, regarding what is going on in the global economy today, how countries are restoring and recovering from the pandemic crisis. Here you see the outcome, or rather the projections for the global economy and GDP growth rates for the leading countries of the world. The most recent ones were published in the September OECD report, and I should say that compared to, for example, the March projections or June projections of OECD, these numbers have been quite significantly revised, and revised, I would say, for most of the countries upwards in terms of their growth rates for 2021, and somewhat downward revision for the 2022 numbers. However, for those countries that OECD believes that they would be performing better in 2021, again, the numbers for 2022 for those same countries were also increased. We do have some better projections for the global economy in 2021 and 2022 compared to the previous projections, but you also do see that this recovery is very uneven. After 2020, after the recession of 2020, this recovery is very uneven. Some countries like Japan, the UK, South Africa, which according to the OECD economists' expectations would still not be reaching the pre-crisis levels before 2022. However, the European Union and the Eurozone in general, and the leading European economies, as well as such developing economies as Mexico, Saudi Arabia, most probably would reach the pre-crisis levels only in 2022. So the recovery was not enough in 2021. I would say that my opinion is very close to that, and of course there is a risk that such countries as Brazil, for example, would not be reaching the projected recovery rate even in 2021. For Russia, we have the numbers from the Ministry of Economic Development of Russia, not from the OECD report. Indeed, Russia is recovering according to the Ministry of Economic Development, and this is happening in 2021. And as you can see, there are some preliminary numbers in terms of the development of the Russian economy in 2021. We do not have yet the final numbers for Q3, but probably the 2021 numbers would really be even higher, up to 4.4%, and then Russia would reach the pre-crisis levels and actually would be above the pre-crisis level based on its 2021 performance. Of course, such other countries as China, India, Turkey, these leading developing countries in 2021 demonstrated very high growth rates. And these high growth rates are expected to continue in 2021. And actually, Turkey was able to somehow escape the recession in 2020, and hence they are in a very good position in terms of their future growth. And I would say the picture there is quite optimistic. Regarding the possible scenarios of the development of the global economy, risks and possible threats to the global economy, or coming from the global economy to the Russian economy, I would say that the set of such threats and risks is the same and quite obvious. Again, we are concerned about the commodity markets. You saw that the falling oil prices and other commodity prices was another risk. For example, if the falling gas prices last year in Europe and in global markets. And of course, this had an impact on the BOP of Russia. This year, however, of course, the situation is quite favorable in the commodity markets and the external negative risk coming from the commodity markets is not that high. The financial or economic crisis in the leading economies, which of course would impact all countries, including developing economies. I will be exploring the possible reasons for such a crisis later, but this is quite obvious. I also believe that a very important factor, which is still very important, would be the sanctions and some sanction-driven narrative coming from the other countries. And I should note here that if you take a look at the Russian ruble exchange dynamics and its appreciation in recent times, you would see still some premium on the exchange rate caused by the risks that have nothing to do with the fundamental economic factors, and such an influence is still there. The debt crisis in the major developing economies, the crisis that's did not happen, as Jose mentioned. This may still be a factor, and of course, a sharp deceleration of the Chinese economy, or another negative factor that would impact the Chinese economy. This is important and relevant because the Russian economy and exports are commodity-driven and focused on China as well. Of course, I cannot but mention the whole gamut of the issues related to the green agenda and decarbonization of national economies, a trend which is very important globally and in Europe as well. At the same time, when you're talking about some possible scenarios and the risks for the Russian economy and the factors that might have some serious impact on the global economy in the long-term and shorter-term prospects, like say 2 or 3 years, then these factors may not be very pronounced, but countries, and I'm talking about this set of impacts from the green agenda, because countries are still trying to assess their man-made influence on the environment and then decide in terms of their policies or structural changes that would have some significant influence on the Russian economy, be it a negative or positive influence, but still some influence. Now, talking about what might await the global economy, after we come to the pre-pandemic levels, so that is the 2019 levels, we need, after we overcome the recession, which was caused by not economic factors, but by non-economic factors like lockdowns, like regulatory restrictions, like a limited mobility of labor and capital. Then after the recovery of the global economy, for Russia, and not only for Russia, maybe also this is relevant for other countries, and it is relevant for the politicians of other countries, we might somehow discuss two scenarios. What is good is that those are not really crises scenarios, and these are the scenarios that would help countries to develop at a higher or maybe a bit lower rate, but still sustainably for several years to come. The first scenario is the scenario that is probably best understood how it is going to happen, because under that scenario, global economies and leading economies actually have been developing or were developing in this way before the pandemic. And this is the scenario which is characterized by low inflation on the one hand, low interest rates, very soft and liberal monetary and fiscal policies. But on the other hand, that was a scenario which was characterized by relatively low growth rates and probably, hovering over zero growth rates within the statistical margin, I would say. Even economies like China, they actually show some deceleration and decrease of their growth rates in that period of time. For some of the leading economies, there was a theory proposed of some stagnation, but thanks to liberal fiscal and monetary policies, those countries actually managed to mitigate possible risks of crises or troubles. A separate issue, of course, is whether such a policy may be sustainable in the longer term. The global economy existed in this mode for 10 years before the pandemic, but would it be able to support this same policy looking forward? It's a question. This is rather a scenario that we would like to have. But there's another scenario, which is the acceleration of growth, the expansion of investment activity, and this is the desirable scenario which was proposed and announced by many politicians. And recently, we're talking about new investment, but we need also to have some ideas for the global economy to grow. However, in real terms, if you really look back and if you try to analyze the previous period, we, the global economy, and the way we actually behaved after 2009, then many people would say that for the global economy to indeed enter this optimistic growth scenario, we need another period of sustainable economic growth. And if the 2008 crisis, as we many believe, was a structural crisis, a very severe crisis comparable to the Great Depression or to the 1970s stagflation, then for us to really develop in a sustainable way, we still need to go through a very long period of more or less stable development, maybe for another 10 or 20 years. If you look back in history again, then after the Great Depression, both the US economy and the European economies actually reached a new model of long-term economic growth, but they did so only after the Second World War and not immediately after the crisis of the 1930s. Stagflation, indeed, a revision of the economic policies. If you would recall the dominance of Thatcherism and Reaganomics, and again, it is only after the late 80s that we were able to discuss some form of stable development when China emerged as the global factory, and also that global economic growth was assisted and helped by the collapse of the USSR, when you no longer had any risks of a third world war, of a nuclear war, and of course the businesses of different countries were focused on global development without confrontation between the big powers. The question is whether the pandemic and the crisis associated with the pandemic cause another such a stable development period, since we have already 13 years behind us after the 2008 crisis. Maybe the pandemic would be the trigger, the shock after which the global economy may reach a higher trajectory of growth. No answer yet for that, but probably in terms of its significance, the pandemic may be compared to the things that I mentioned above. And the pandemic may be this factor that would really urge the global economy to reach a new height in its development. Now, in terms of the unfavorable scenarios, and I was before talking about favorable development scenarios, here I actually present the key crises and key points that were discussed, say, in 2019, and we can compare that to the situation that we have today in 2021. Since the early noughties, and also, if you take a later period of the 2018 and 19, many people claimed that we really had very slow growth, but it was a balanced one. And that growth also was exposed to some risks that we had before the 2008 crisis, and they more or less preserved until a later time. And we may still see something that may have caused another crisis. And the factors were the end of the super liberal, super soft monetary policies in the US, and the debt crisis in the US and the EU, kind of like slow growth in the interest rates, and hence this caused some problems with the servicing of debt and the deficit that we saw in the US and the EU. The collapse in the stock market of the US even before the pandemic, we all thought that actually it hit the record lows, and we had some forerunners of a possible stock crisis in the US back in February and January. A sharp deceleration of the growth rates in the real estate market, and also the financial crisis and the banking crisis in China. We all thought that the Chinese economy, despite the high growth rate, was still accumulating many contradictions that may cause another crisis. And of course, we saw the trade wars between the US and the EU, between the US and China. We thought it may totally destroy the whole system of international trade and destroy the long-established mechanism of multilateral trade relations and the conditions that guaranteed the mutual development and stability of the international trade system. And the banking crisis in Europe, especially in Italy, again, the banking system of Italy was considered to be the sick man of Europe that managed to more or less survive in the difficult years of 2010, 2011 with the EU crisis, debt crisis, but at the same time, that crisis was never resolved in full. Now, if you take the situation in 2021, perhaps the risks of a trade war are still with us, and this is really what we see in the continued policy of the U.S. administration. You also see that the end of the super soft monetary policy resulted in what Jose and Pavel mentioned in the higher inflation rate, which is especially visible after the sharp decrease and drop in the economies and the weaker consumer demand. And we do see that in the US and in other countries. And we also see that interest rates are growing, but this is actually caused not by the exit from the liberal monetary policy, but by higher inflation. And hence, this may cause another problem with the debt service in the US. Again, the stock market is hitting its quite record highs today, but the risk of its failure is getting more and more significant. In the recent weeks in China, we see some crises with the biggest developers there, and of course, one of the more important risks are the risks of corporate debt from the companies that are more or less public, or for the most part, but the government was not prepared to fully commit itself to any support to such companies. And the debt crisis in China is the most important one as the negative factor that actually influences the whole market.
Есть риск и сохранения пандемии, плюс, наверное, надо отметить то, что, опять же, мы наблюдаем в последние недели, достаточно неожиданный, причем связано совсем не обязательно.
Forthcoming weeks, we have been observing, well, additional energy crisis development in Asia that may be partly related to a change in the energy consumption patterns and partly is attributed to the pandemic as its legacy, with environmental chains disrupted and the energy stockpiles and stocks spent without new supplies, and despite the upswing of energy prices in Europe, Asia, and China, and they are having a short supply of energy in many parts of China, and the bills, utility rates go up there. And in the forthcoming future, all that will impact the pace of the global economic development. Thank you. Thank you, Sergey. I just want to ask one follow-up question. on your presentation, we know that the long-term stagnation notion is now mooted worldwide, and it arrived in Japan back in 1990s. And now it is mooted in Europe, whether they're in for that in future, or it probably is already in place. So, to your mind, when the pandemic is through, hopefully in near future, shall we once again come to discuss the long-term stagnation problem in Japan and Europe, or something will change? Well, as I said, the long-term stagnation scenario, which is a slow but uninterrupted economic growth, is one of the favorable scenarios, and I think the probability is relatively high. Well, it's clear that Europe and Japan fundamentally have all the prerequisites for a long-term stagnation. They have the high level of capital accumulation and the low birth rates and high proportion of the elderly people, as well as a change in saving and consumption patterns that has happened recently. So I think this is not entirely a bad thing. On the one hand, the growth rates would be relatively low, but on the other hand, with respect to GDP per worker or per capita, there will be no fall, so the well-being will not be reduced. And if economic policies aim to prop up the well-being, the universal well-being, this option for the economic policies would be favorable. And the risks of whether new economic drivers will come into play remain there, and definitely the downside may always arrive, and against any possible downside, the incremental slow growth would be a benevolent option, and that may be the optimal choice for them. Thank you for your intervention. For the next presentation, I would like to give the floor to Mr. Gurevich, head of the Economic Expert Panel. We are so glad to see you, Mr. Yevsey. A very good afternoon. Unfortunately, you are not able to see me well enough, but I hope that I'll be able to share my screen. Can you see that?
Пока не загрузилось, может быть, если у вас проблемы.
It's not visible. We're not seeing that. Probably you might disconnect your camera to have better connection. Because you have interruptions, you drop out.
Микрофон у вас был выключен.
You have been muted. Yes, can you hear me loud now? Yeah, right. Thank you. As you know, the pandemic-related crisis has resulted in the lowest slump of the global economy since World War II, and it's also common knowledge that the second slump of the global economy happened historically not long ago, during the recession of '09, the economists were astounded by how slowly some of the countries recovered after the recession, like Greece. In terms of their GDP, slumped by 30% since then. So in Greece, GDP to capita, well, they stopped being in the bracket in the rung of the developed nations, and they're now in rather, as per this parameter, among the emerging countries, and Italy is still far from the output rates and levels they had before the recession. Spain took a long while to recover from the from that recession, and back in 2020 they once again slumped below the '09 levels, and that definitely arouses great interest among economists with respect to the long-term effects of the crises. It was considered that the crisis would cause a deviation, a variance from the economic patterns, but afterwards a recovery takes place, and the economy would be back on the development trajectory. But after the downturn, opinions appeared that downturns and crises may impact considerably those patterns, changing the curve. Like if we look at 2021 and the global economic recovery among developed nations, we see an upbeat and optimistic picture. And Sergei has said that, giving the latest projections and figures and data for the emerging markets, the recent IMF outlook by next our projections will appear this week. But you know, the developed nations by 2022 will reduce their shortfall in growth to as would be without the pandemic, to less than 1%. But you know, the emerging nations will be in parallel with the pre-pandemic expectations. And this makes a big difference of around 4%. So the current IMF projections confirm that the crisis impact is of long term. It's not an interim measure. For Russia, the situation looks better, starting with 2022. The lagging behind the original trajectory would be reduced, though it will not be shortened. Are you showing your presentation? Because it's not visible. I figured that you were reading info from some slides, but we can't see them. I'll try to share my presentation once again. You might launch your presentation and disconnect the camera. Just a second.
Да, вот теперь все видно. Спасибо.
Now
Замечательно.
it is visible, thank you. I'll show you the previous slides.
Это слайд, который показывает динамику
This figure shows the curves of Greece, Spain and Italy after the recession. All the three countries are now lower, are positioned lower than 2009. And this is the IMF projection for advanced nations, showing that starting with 2022, the trajectory would lag behind by 1% from what was had been expected before the crisis. And this is the IMF outlook for developing and emerging nations. Well, the difference is sustainable at 4%, and here the lagging behind is 1.5%. It's also sustainable, unfortunately, and protracted. Now, when the pandemic struck, the scholars started talking about the long-term projections and after effects, and the IMF did some extra work on that, some extra research. So the pandemic caused several specific problems for the long-term growth, and it would aggravate the previously existing problems. So the first effect is the anti-COVID measures that restricted the workers' activities and the trade and the movements and the travel. Here I have built the pattern of the anti-COVID rigidity measures built upon the Oxford database. I have provided the average toughness of anti-COVID measures by months for 25 major, biggest developed and developing nations. You can see that after the spike in the spring of 2020, only a slight reduction of the toughness of the anti-COVID restrictions happened, and there have been ups and downs since then, but anyway, they're a far cry from the pre-COVID situation. So the anti-COVID measures stabilized in the range around 50 points out of 100 possible. The peak was at 80. So the first projections of the pandemic after effects that were made public by the IMF in the spring of 2020 envisaged the isolation measures would last around 1.5 months, and there was supposed to be a one-off thing, but now we're seeing that the reality is totally different, and there were several studies, including by the IMF, that assessed the effect of the economic measures on the economic activities, and several studies gave similar results. The factor would be 0.1, and if we assume currently the toughness is at around 50 points, that means that only because of this input we would be falling short of another 5% of potential GDP gain globally. And the results show that the restrictions impact is petering out gradually. But still it is a major factor in place, and no one knows how quickly it's going to abate totally.
Прививок, но пока что
Hopes were pinned on vaccination. Currently it's on, while no major lifting of the restrictions takes place. The second impact is how the pandemic influenced the workers, the workforce. I looked at the Economic Development Ministry projections for the Russian Federation. That I compared those done before the pandemic and the recent ones. We can see that with respect to the number of workers, working age people, and the total manpower, the lag would be around 2%, and the gap is still widening, and the 2% is not that low level. That means deducting or at least 1 percentage point from the growth figures, growth rates, which is quite a considerable value. There are also arrangements in place that have the long-term impact on the crisis. There's the hysteresis effect. That stay protractedly, like we have looked at the international track record of handling the pandemics, and we found out that the economic after effects of the pandemics in the past were relatively pronounced. I'll cite just two sources. One said that the pandemics will entail savings and growth, and the interest rates and the investment yields would go down, and as a result, investments would come to a halt, sometimes for decades. And the second paper shows that a pandemic would lead to a 3% GDP growth, which is more or less the average we saw last year in the global economy. The output starts rebounding quickly, but for the 5 years afterwards, that would be behind the pre-crisis levels. Current outlooks are more optimistic, saying that the global output and GDP will exceed and surpass the global levels of the pre-pandemic stage. But anyway, the projections that were made early at the inception stage of the pandemic were excessively optimistic. So these were the data and the international groundwork. We also did some simulation and in one of the works of Serra et al. Found out that the long-term observed negative after effects are due to a slump in investments that respectively leads to a reduction in GDP and the total factor performance or productivity, and in investment reduction by 1% would lead to the be reduction by 0.5. And the contraction of the lending, bank lending, and the output is also an effect. And potentially that has an impact on the output. Some of the papers present the midterm effects building upon the simulation models. And the conclusions are that depending on the nature of the recession, an average impact of the pandemic, the midterm impact may be from -2.2 to -3.6% of GDP in total. And another paper demonstrated even a more pronounced footprint of the pandemic with respect to the global economic development. -6, starting from -6 to -16 would be the range. And the next line demonstrates the public debt increase, which is quite real. The debt burden, sovereign debt burden, may be up to 25%. So the sovereign debts may increase by a quarter globally. So the takeaways of my presentation are as follows. The possible negative impact of the pandemic may be extended and protracted and may persist and be considerable, and that may require considerable measures, substantial steps to iron out this negative impact. And active anti-crisis action must be taken. And the same studies demonstrate that some of the measures may help smoothen the crisis impacts and manifestations, and the incentives were of a very large scale nature. But on the other hand, it may be fraught with problems in future, like the increase in public debt and a possible need for fiscal consolidation in those countries that are seeing a crunch, and there may be an inflation spike, although Jose believes it's not a fundamental issue. But in a certain context, that may translate into a problem. So what needs to be done is the anti-crisis measures they must be supplemented and complemented with the structural economic measures. And it's obvious that the current crisis is to a large extent a structural one versus the previous crises. And we're seeing a change in the structure of the economies that suffered, and to a large extent that is needed to overcome problems. So for that sake, structural action must be taken, and there is a need for a spillover of resources to more efficient sectors of the economy. Thank you very much, Mr. Yevsey. Gurevich. And I have the following question to ask. You have looked at the previous pandemic studies. Do you think that the current context fully replicates what we saw in the past? So probably the pandemics in most cases would go hand in hand with shriveled demand and consumption being reduced. But currently we're seeing a different picture because of to a large extent, the incentives and stimuli measures. Now everybody has gone online, and that entailed the growth of productivity in some of the sectors, like those IT related and AI related, which may prop up the manufacturers. So don't you think that the current pandemic-enabled crisis is different from the previous ones? Thank you for your question, Paul. Yes, this one is a unique crisis. We will not enumerate all the differences once again, but to certain extents, it is better than the previous ones. In other respects, it's worse. So it is better with respect to what you have mentioned, but it is also worse. There are some negative factors that were never faced before. So the restrictions and lockdown measures, as I said, had a major impact on the manufacturing. And the impact on the manpower is also quite pronounced. Besides, I see that many of the effects that I have mentioned refer and relate to this very crisis as well. Definitely this is a different crisis, but it's not obvious whether it's for good or for bad. So no one knows, which is a conclusion that any good forecaster would make. Now, let me move to the last presentation in this session, and let us speak about the outlook for Russia. Alexei Vedev, head of Ranipa Laboratory for Structural Research. Yes, I have uploaded my presentation. Thank you very much. The pandemic has been a negative shock.
So this was an influence both on the demand and supply, and Russia actually looked good against the global background, because mostly SMEs would suffer, and the Russian economy is the economy of large and medium enterprises, not smaller ones. So a fall of 3% looks actually plausible. Not plausible would be the international comparisons, because if you take the GDP of Italy, that GDP is like 70% SMEs, and 50% of the US GDP is also SMEs. But Russia only has 30% of its GDP of SMEs. So incentives, of course, should differ between the countries based on such proportions. We all realize that in 2021 we're going to grow, and the key question that we still don't have any answer on would it be like the corrective growth, or are we going to reach the sustainable development trajectory? In the first half of 2021, performance was quite impressive, and indeed, this growth, this recovery growth, was based on a broader internal demand. In addition to the traditional demand, we have three more sources. This deferred spending on foreign travel, about 2 trillion rubles. Of that, the 20 to 22% year-on-year consumer lending and less propensity to save. The drop from 10 to 5%. Indeed, in 2020, there was a very high uncertainty, and now people want to consume more. And of course, we have the headline inflation, which grew from, well, it is maybe was driven by this balance between the demand and supply, low competition, because in many of the markets, the competition is oligopolic and quite low. And instead of broadening the supply of goods and services, the surviving companies were trying to recover their losses of 2020. That's why current inflation is at 7.4, which is actually quite high, even compared to the inflation target. The disposable income of people is growing. The labor market actually recovered, and in many of the segments of the labor market, we have a deficit, a shortage of labor. According to the Moscow government, we have about 200,000 jobs remaining vacant still. Now, what is happening? I think that today we have a syndrome of 2019. If you remember, in 2019, in the fall of that year, the economic ministries of the government realized that the expected growth of 3% in 2020 would not be attainable, and we are in a phase, and we were in a phase of stagnation. According to MAD, Ministry of Economic Development, that was the outcome of very tight fiscal and monetary policies. In the fall of 2021, we have more or less the same situation. Inflation, which is 5.8% in the within the framework of recovery growth, would be quite normal, and you don't have to really fight that inflation so severely. However, the Bank of Russia is increasing its policy rate. The budget is trying to restrict spending, and of course we are facing again a very tight monetary and fiscal policy, which kind of like makes you to believe that the main risk, and that is going back to stagnation, may actually come true. Well, we have not left stagnation per se, because we actually fell 3% last year, and we are growing only 4.4% this year, which gives you an average of the last 2 years of only 0.7, 0.8% as we had before. What is important also is that we were trying to fight the pandemic, the coronavirus, but the problem of potential GDP is not resolved since 2019. Nothing has changed since then. As it was assessed back then at 1.6, 1.7, it is still being assessed at that, or estimated at the same number. The projections until 2024 by MAD would be the growth of about 3% annual, and investment would be growing by 5%, but this is not realistic, I believe. And also, the idea of raising the spending from the sovereign wealth fund gives a signal to all the investors that the Ministry of Finance and the government are going to be very conservative. And the threat of inflation to the government is perceived to be more severe than stagnation and lack of economic growth. Well, our assumptions, we believe that the global economy is going to grow quite significantly this year, maybe 5.9 to 6%. These are the rates that we more or less forgot back 15 years ago. Now we may be coming back to that. Also, the oil production may also recover based on the OPEC plus agreements, and the oil price would be within the range of around 65, 66 USD, although we had some pessimistic forecasts a few years back of oil being at 45, 47 USD. Now, our budget in Russia was based on the projected oil price of 43 USD. Now it is more realistic to base ourselves on 66, 67 USD. So we are more or less conservative, and we only opted for 55, 56 USD. Well, inflation, we believe that we may see some acceleration of inflation, but it would hit the targeted level in 2022. By the end of that, investments would recover, and the demography, because of the demographic fir tree, we may expect the decrease of the economically active populations. These are the assumptions in numbers. And as you can see, by 2023, the global economy growth would reach some medium growth of the previous years of about 3.5%. Our scenarios, we believe that the risk of stagnation and low growth rates would materialize because of the lack of fiscal stimulus, and there I would agree with my colleagues that such stimulus is very important. I should also say that the Ministry of Economic Development presented two scenarios, two projections. One is a baseline, which is the most probable, and conservative. And by the way, the conservative scenario was driven by the policies of the Bank of Russia and the Ministry of Finance. That is the increase of the policy rate and low spending from the sovereign wealth fund. Well, the Bank of Russia also presented its own projections only 2 weeks ago on the guidelines of monetary policies, and their projections also show that the Bank of Russia expects the growth of about 2 to 3%, but it is mostly 2% rather than 3% if you look into the narrative of that projection. Also, the growth of disposable income of the populations may be very low, may be at the level of statistical error margin. So inflation would be going on by itself, and it would accelerate because of the overheating internal demand, but it would be also offset by what has happened in the last 7 years, and that is the very low and actually decrease of the disposable income of the households. So inflation would be won not by the higher policy rate of the Bank of Russia, but by a very low demand. In terms of unemployment, you can see that unemployment is not really a Russian problem or challenge. It's the key problem there is really to try to compensate labor or the shortage of labor in the economy. In terms of the current account projections, there we expect that imports of services would restore and recover by maybe late 2023, most probably in 2024. In terms of the growth model, you can see that this year it is quite balanced, just because of the internal demand and also external demand, and this balance is actually biased towards internal demand, while the external demand would have a lower share in this balance. In terms of risks, we also had 2 rounds of stress testing. Sergei Gorbaishevsky talked about that in part, talked about the external threat. We think that this is a higher volatility of oil prices globally, global financial crisis, and sanctions, and stronger sanctions. And of course, of some interest to us was the stress testing in terms of deciding how it is going to impact the Russian economy. Well, according to our estimates, if this happens in 2021 or maybe 2022 as well, well, we were not trying to decide when it is going to happen. We just wanted to analyze the stress test options and how those impact the Russian economy. So an oil crisis would generate a negative growth rate of GDP, just like the global crisis of 2022. But in the event of a global crisis in 2022, this drop in GDP, real GDP growth would be much higher. And that would be the outflow of capital and lower demand as caused by such a crisis. Well, the key risk to the Russian economy is the going back to stagnation. Without doubt, you need a stimulus to prevent that. And of course, what is also needed would be to somehow reduce this overheated macroeconomic stability and provide the fiscal stimulus. Thank you, Alexei, indeed, for your contribution. So after all, what can be done to improve our growth rate from 1.7 potential to the average global one? Well, we discussed that in many venues what needs to be done, but perhaps I would formulate this like this. Would the pandemic influence the traditional recipes that we all know of recovery? Indeed, we discussed this at length, what needs to be done. Without doubt, you need to reduce the share of the government in the economy. But if you take the 2020 outcome, actually the government's share actually went up because SMEs bankrupted and the SOEs did not. And of course, privatization, and of course, higher competition in many of the segments of the market so that you can improve the reaction of the producers to the changes in demand. Without doubt, we think we need to consolidate and strengthen bank regulation because, you know, the bank profits are record high in all the previous years. And of course, the costs of the rest of the economy then would be also higher and growing. And to the maximum, we need to spend more on investment because I can tell you that if you take the national fund to spend 300 billion rubles, you would think that this is a lot. But all investment into the economy this year is only 24 trillion rubles. And of course, another 300 billion would be a drop in the sea. And of course, you need to increase the spending from that fund and with the highest multiplication effect at that. Thank you, Alexei. I would like to thank all the participants of this first session and invite you to stay with us. So we are going to open another session at 1600 where we're going to discuss in more detail the impact on the global economy, such things as fintech, the green agenda, and the trade wars. Thank you, colleagues, and I hope to see you in future. Thank you.
Добрый день, уважаемые коллеги. Hello, Larry.
Hello, colleagues.
Hi, Pavel.
Вас всех видеть.
We're pleased to see you back, and we start the second part of today's conference that is dedicated to the key or main challenges for economic development.
Работает перевод? Все в порядке?
Can you hear the interpreter, Larry?
Yes, I can. Very well.
Отлично. Уважаемые коллеги.
Good. So, just a few technical points at the outset. Please be confined within the 20 to 25 minutes per intervention. If you have any questions, follow-up questions, please send them, submit them via the chat box, and I will voice them. Without further ado, let's move along the agenda. We will speak about the main challenges, and one of these now, currently, is the climate agenda. Less than a month remains till the Glasgow summit, and everybody expects a breakthrough or some major arrangements agreed upon, and definitely the debate is rife with respect to what must be done. Economics-wise, in order to reduce the impact of the global warming and reduce the emissions of CO2. We'll have 4 presentations, and at the outset, I'd like to hand over to Professor Larry Kotlikov from Boston University, speaking on how can a carbon tax be a win-win. Over to you.
Great. Well, it's a great pleasure to be with everyone today. And carbon taxation is the answer, or part of the answer, to producing a win-win. Let me set the stage for discussing a global win-win by talking about how economists have, I think inadvertently, but still clearly started a generational war over the climate when that should never have been the case. The way that the economists have modeled this problem is not just to include the carbon externality, the damage that current generations are imposing on future generations due to carbon emissions, but to conjure up a social planner. This was Nordhaus, Bill Nordhaus, William Nordhaus, who got the Nobel Prize for his work on climate change. He wrote the original paper on climate change and how to fix it, and he brought forth from the heavens a social planner who had certain preferences about how to treat current versus future generations. So he had a certain generational morality. So this social planner that Nordhaus thought about, he gave the social planner certain preferences, and then he solved the problem of the social planner and said, here's the solution. We should have this carbon tax, and it should grow at this rate, and that's that. This is the answer, in effect, and now everybody should just do what I said. The problem with that is that other economists came along and said they had a different social planner, and their social planner cared more about future generations than Nordhaus's. So in particular, Sir Nicholas Stern, he's been knighted, had his, he wrote a whole study with some other people called the Stern Report, where he had a different social planner in the sense that the planner had the same basic preference structure, but cared more about future generations than Nordhaus. So now you have a different carbon tax solution. And this opened the gates for every economist to come up with their own social planner and declare their own solution. And the whole discussion and analysis moved away from economics to religion. And then when a carbon tax was not really implemented, and clearly we have some controls on emissions, which you could say are effectively like a carbon tax, but it's also the case that whatever we're doing doesn't correspond to having a carbon tax that's at the level that I'm going to argue is appropriate. Anyway, everybody had their own view of that's to say the economists had their own view, and then nothing happened really fundamentally in terms of global policy changing enough to matter. Clearly, we've had a lot of people pay attention. We're going to have everybody get together in Scotland like they got together in Paris, and people are going to say a lot of words, but will they actually implement a carbon tax or some other equivalent policy that really fixes the problem fundamentally? So, so Nordhaus succeeded to raise the problem, and then he succeeded in producing what I would say is a generational war, not a physical war, but a moral war, where you have young people like Greta Thunberg from Sweden comes to the UN and accuses the delegates, all of whom are over 50, of being immoral people, and says that, don't think that we young people don't understand how evil you are. And then she leaves back to Sweden, and we get no change in policy. Now, economics teaches us that carbon emissions is an externality. And it also teaches us that when you have an externality, it's due to a missing market. There's not a market available for future generations to pay current generations to reduce their emissions. That's the missing market. Or if the future generations had the property rights to not have the temperature of the world rise, they could tell current generations that you have to pay more. But anyway, we don't have this market, but we do have the problem. But what economics teaches us, the economics of externalities, that's taught in the area of public finance from where I come. Nordhaus and the other people that are primarily writing about carbon, climate change, they're macroeconomists. So to them, invoking a social planner is quite natural because they write a lot of models with a social planner type framework, or with people that are, or agents that are altruistic towards the future generations. So they're used to those models, but that's not the world we live in. The world we live in is where Greta is correct. Current generations don't care about future generations. They're selfish. And she can have as many speeches as she wants, but it won't change behavior. And we can have as many meetings as we want in Paris or Scotland or wherever, nice places for people to meet, where it's not too hot and not too cold. There's good climate control, and nothing will change because the problem is not being viewed as an externality and as a missing market. And when you have a missing market, you could say, well, there's just no way you can have this problem fixed because future generations are not around to interact with current generations. But the economics of externalities and public finance tells us that we can have the government in effect engage in policy that makes the market. So we can have the government have government policy substitute for the market. So for example, if you put on a carbon tax, you can get the right pricing at the margin for an extra ton of carbon emissions. You can have people understand that if they buy some coal to make steel, it's going to cost them more. And that higher price is going to take into account the marginal damage they're going to inflict on all future generations. So the economics of externalities tells us we can figure out the right price of carbon, what the right carbon tax is, but it also tells us something else that's very important that hasn't been conveyed in any of these meetings, and certainly not by Greta. She doesn't seem to understand it. And nor does Nordhaus seem to get it too much, which is that everybody can be, when you have an externality and you fix it, when you get the pricing right, there are efficiency gains from that. There are economic gains that can be spread across potentially everybody in the world, not just everybody in the world today, but everybody in the world in the future. So that's what I've been doing with my colleagues at the Guidar Institute, Andre Polvin in particular, and Simon Scheidegger, who's an economist at the University of Lausanne. I'm speaking to you from there right now. I'm visiting with him, and we're working long distance with Andre and in real time. And there's also Felix Kubler, who's an economist at the University of Zurich. So we have together written 3 papers. The one was just about a single world where you have a single region and you're trying to think about a win-win carbon policy. One is a paper in which there's no carbon damage on average, but there's risk, is upside and downside risk from climate change. And the because people are risk averse, the downside risk is much worse than the upside risk. So that produces an argument for having a carbon tax, because you want to kind of self-insure future generations. And then the last paper that we just put out as a National Bureau of Economic Research working paper, it's about getting to a win-win carbon policy in a multi-regional model. And so we took the entire world and we put kind of condensed the entire world into 18 regions. So Russia's a region, the US is a region, China's a region, Western Europe is a region. So we have 18 regions. South America is a region, apart from Brazil and Mexico, which are separate regions. Anyway, we looked at the damages by, on a region-specific basis, because Russia could actually benefit from climate change by getting warmer, and Canada could benefit. And what we did is said, let's think about the efficiency gains, but let's think about spreading the efficiency gains across everybody who's currently alive and everybody who's going to come in the future. And let's think about doing it such that everybody experiences a uniform welfare gain. And what we show in this paper is that if you start with a carbon tax about $100 per ton and let that grow at a 1.5% rate through time, you can, and then you go beyond that to also have compensation, side payments between regions, and also between generations within a region. If you do that, if you get the side payments correct, you can make everybody now and coming in the future throughout the world uniformly 5% better off. It's about 4.5, closer to 4.5 actually, % better off. But anyway, it's a uniform win-win. And you might say, well, how can that actually work? How do you actually make current generations better off if they have to pay a carbon tax? Well, here's one. There's lots of ways to do this mechanically in terms of the compensation mechanism, but intuitively, one way to do this that is very intuitive and very clear is you tell current generations, look, you people are selfish. This is what Greta should have said at the UN. You're selfish. We realize you're selfish. We realize you're evil. You're terrible people, but you'll have to live with yourself. But before I leave, let me cut a deal with you. And the deal involves the following. We all adopt a $100 carbon tax throughout the world. And then you cut other taxes and accumulate a debt, so run deficits. So you cut other taxes by enough so that you're better off by 5%. So if we think about the US government would be putting on a carbon tax, but at the same time, it would be cutting let's say, payroll taxes and income taxes, so that all current generations would be, and they, we'd have to do this generation by generation. But anyway, the basic idea is to run a deficit, accumulate debt, make current Americans better off on balance. They have to pay more money for gasoline, for heating, for electricity, but they pay lower taxes in total on balance, so more carbon taxes, but lower, more energy taxes, but lower other taxes, so that on balance they're 5% better off. And the same is true for everybody around the world. Now, how do the people in the future, how do the future generations become 5% better off? They have to pay off the debt that is being issued here. Well, so that makes them worse off. They have to pay higher taxes than would otherwise be the case in order to pay for these deficits that have been accumulated. But their climate is going to be much better than would otherwise be the case. So in this most recent paper that we have that's at the National Bureau, it's a National Bureau working paper. It's also at kotlikov.net. You can just go there and click on articles and download the paper. And what you find is that the paper is called, "Can Today's and Tomorrow's World Uniformly Gain from Carbon Taxation?" So what we show is that that's, in fact, the answer, in fact, is yes, that we can have a win-win. So now, if Greta had sent to the UN, look, all of you people out there in the General Assembly and everybody around the world, I have a plan that I've worked out together with some economists, and we're going to spread the gains from internalizing this externality, from fixing this problem, from in effect making the market, have the government make the market between current and future generations. And we're going to take the gains and spread them uniformly across all generations and all regions and all time. Everybody's going to be 5% better off. Is there any one of you in the General Assembly opposed to that? Is there any one of you delegates who would not want to give your countrymen a 5% welfare gain? Put your hand up, please, right now, if you're opposed to that. Nobody would put their hand up, because nobody would say, well, I'm not being treated fairly. Somebody else is getting a better deal. Everybody would get a uniform, equally good deal. And this is completely possible. And this is just standard in economics of externalities. Now, the reason that it hasn't been discussed, an intergenerational, interregional win-win, is because the people that have initiated the work in climate change are macroeconomists, and they didn't have the, this is my feeling. Nordhaus was terrific in putting his finger on a big problem, and he certainly fully deserves getting the Nobel Prize for that. But what he did was, by thinking up this social planner, right away, he brings into the problem religion. He leaves the world of economics, brings her in religion, and he says, my God is better than your God. And then somebody else, of course, comes along who's an economist and says, my God I've got a God too, but he's different from your God. He wants to do something different. And now it becomes the fight over whose God is correct, and we do nothing gets fixed. But had Nordhaus had knew how to solve the other problem, how to solve the problem of selfish generations, and how to make and that's a much more difficult problem to solve on the computer, because our model right now has about 3 million equations and goes for about 3,000 years. So you have to solve 3 million equations and 3 million unknowns in a finite amount of time, very, very precisely. And and it takes several hours for the computer to get the answer. And you have to do a lot of calibration, because you've got lots of generations, lots of regions, lots of fiscal policies that have to be considered. But we did all this over a period of years. And we now have the latest study, and we showed that indeed we can have this win-win solution. And I'm hoping that we're presenting this. We presented the paper to the International Monetary Fund. We presented it to the European Central Bank. We're going to be presenting it to, the U.S. Treasury. I'm going to try and get us invited to give it to basically every major international group and U.S. group that I can connect with. I've delivered the paper to the Environmental Protection Agency. So I think through time, this idea of not just carbon taxation, but carbon taxation combined with compensation will get across. Now, the compensation, let me just say what's the last couple of things. I know I'm running out of time. The compensation to Russia would be positive. Russians would get compensated because if they need to be bribed to put on the carbon tax, because if climate changes, Russia's better off. Canada would also need to be bribed. India would have to pay very large taxes, so their compensation is negative. They have to pay to other regions. Why? Because India's in our calibration, if we don't fix the climate problem, they're going to suffer a 47% decline in their GDP as a permanent damage, according to, we've done some very careful calibration, and I'm not saying that anybody knows for sure what the right damage function is, and there's been a lot of criticism of, this literature by people who correctly say we're kind of guessing about the damages, but using the best knowledge we have, India is really going to suffer. So India has to really pay a lot as a share of its GDP to get the rest of the world to agree to the carbon tax. But on balance, everybody in India who's now alive and is coming through time will end up 5% better off, even after paying this big tax to pay some of the money of which will go to Russia. So we've got a picture of India paying Russia, the US paying Russia, and any country that's experiencing very major damage is going to have to be a pay to bribe the other regions so that everybody can have a 5% win-win. But it's in everybody's interest to pay the compensation because we get everybody better off. So we have this alternative. We have two options, and I'll just stop. We have the option of using economics, solid economics, the economics of externality that was developed for years. And we can fix this problem with everybody understanding they're all going to benefit. Or we can maintain we can ignore standard economics of externalities and continue to pose this problem as one of morality, generational morality, interregional morality. Rich regions should help poor regions. Today's generation should help future generations. That's all good, fine and good, except that nobody's altruistic. We live in a world where regions are selfish and where generations are selfish. That's the reality. So let's accept that reality and let's make some progress, because as we show in the paper, if you do this win-win solution, you get rid of about half of the problem of the carbon of climate change. You get very significant changes in emissions, but half of the problem still stays in place because we have gone so long and accumulated so much carbon in the atmosphere that the best we can do in the context of making everybody uniformly better off to the maximum extent possible is eliminate about half the carbon problem. But I think that's the best we can do. We should do it. And so I'm very proud to have been connected with the GuideR Institute to do this work. And we're now, the last thing I'll just say is that we have plans that we're working on right now to make this regional model incorporate uncertainty about climate change and about the damages. So we're going to produce an even bigger, more complicated model to solve for the gain in what we call expected utility, make a uniform gain in expected utility, taking into account the uncertainty and taking into account, for example, the tipping points that might occur. And but the whole idea is still being, let's make this a win-win across generations, so, and across regions. Let me stop there and thank you again for having me.
Да, спасибо, Ларри. Я думаю, что всем будет очень интересно.
Thank you very much, Mr. I think everybody will be delighted to learn more about that modeling and simulation that you have talked about. The question is that as follows: it's not enough to show in a model that it's going to be a win-win taxation incentive, but one should persuade all the leaders at the political level to impose this tax. Like Russia and Canada might benefit from the warming, and India will have to pay a big price. And is it possible, like on the global level, on the top level, to agree such a carbon tax and put that in practice, in action?
I think it is possible. I think if the people get into their head that everybody can benefit, current and future generations, I don't see where the opposition comes from. Now there is uncertainty. You might say, well, we could do this, but we could end up pay this big compensation. The climate might still go bad. Our efforts may not work. We'll have paid a lot of money if we're India to some other countries. And well, that's why we're doing the next study, which takes into account the uncertainty of how the climate will evolve and how much damage will occur. And so what I would then say to, let's say, the leader of India would be, look, you're right, there is uncertainty, but this latest paper, which incorporates the uncertainty, says that on average, you're going to be 5% better off, or 6, whatever the number comes out to be, by taking this step, that you'll benefit, taking into account the uncertainty, because the downside is worse than the upside. So you want to do this because what you don't want to do is nothing and have the rest of the world do nothing. You want to participate because nothing could lead to a really terrible downside. And even without the uncertainty, we have India losing in our model, in our paper, about 40%, 7% of their GDP. So you have no option but to agree to this because it's the best you can do. You can't rely on the Pakistanis to be altruistic towards Indians. It's not going to, I mean, obviously they're in kind of the same boat, but you can't rely on, let's say, the people in Canada bailing out India. They're just not that, they like Indians, but they're just not going to give up a lot of money for to help you guys. Sorry, it's just not going to happen when they're going to be better off from climate change. So you got to participate in bribing the rest of the world because you're going to be the biggest beneficiary. And on balance, you'll be better off. So that's my hope. And yes, you're right. It takes politicians and it takes communicating to the politicians, but we have a good message. And so we're starting down that path, and we are starting to talk to major groups, institutions. So I think that maybe the conversation will change. Maybe this will actually matter.
Спасибо, Larry.
Thank you, Larry. Colleagues, for the next presentation, I would like to give the floor to Antonina Levashenko, head of the OECD section of the Russian Academy of National Economy. And Antonina is going to elaborate on the green or transit financing. We know that more and more those financial instruments of green financial instruments are getting popularity, and they also cause some challenges that would be discussed by Antonina. Hello to all of you. Pavel, thank you very much for being invited. I hope that you can hear me well. Yes, we can hear and see you quite well. So let me share my presentation. And I will start with discussing why my center, which cooperates with OECD, is also looking into this transit or green financing. We have heard much about green bonds and green financing, but OECD is really paying a lot of attention and special attention, priority attention to the creation of conditions for transition financing. We may discuss at length how world should be beautiful and ideal if we would have everywhere electric cars and renewable energy, etc., etc. But if we're going to also to kill half of the economy of other countries, of all countries, because that half is not green, we're not going to achieve the goal that we actually set for ourselves. So a few years back, OECD did some research about transition and concluded that the world is still not there, not to achieve the goal of minimizing CO2 emissions. And of course, this transition would impact the economies and the major economic players in the most developed nations and economies. What sectors would be the hardest hit during such a transition? Commodities sector, but it may also be other carbon-intensive industries such as car making. As the reasons for this effect, they cited the following: unless we plan well, and not even in terms of feasibility, but otherwise, unless we plan for this good transition, we may increase the costs and current expenditure of the existing players. And as a result, we may see new legislative initiatives or incentives for the so-called sustainable investors. And such categorization of carbon-intensive sectors may also influence the access to capital of such carbon-intensive companies who simply cannot make such a transition or are not willing to make such a transition within the framework of the decarbonization effort. And OECD says that to prevent such asynchronous action, we need to focus on the transition and orderly transition to a new economy so that we optimize the carbon-intensive industries. And more we are asking ourselves what investors should be looking at. What is this orderly transition? Where do we have the focal points related to environmental risks and which technologies may help companies adapt to the new economy? Of key importance would be such transparent analytical tools. And of course, I'm talking mostly about ESG ratings, indices and providers. And the second tool that can be used is the financial market. We can use the financial market to provide sustainable financing of the companies that may be the source of high carbon emissions, but that also show their willingness to reduce their emissions looking forward. And for that, they need such sustainable financing. So two big tools. First, transparent and accurate information about the companies and their credit ratings. And this is the ESG instrument. And the transitional or sustainable financing is the second tool. Here on the diagram, you will see the drivers of investors, governments, and others to understand which of the companies may be sustainable and profit-making in the future. Maybe it is not profitable today because of the transition, but still. And see here, you have these two tools, ESG ratings and ESG indices. And the second opinion is the transitional financing. These two tools or instruments also have some associated challenges. In this country, in Russia, we sometimes unjustifiably so praise ESG ratings, but many countries actually go further. There's much criticism about the ESG ratings because there's a miscoordinated methodology and lack of transparency beyond such ratings. On the right-hand side, you can see the Bloomberg and Refinitiv ratings. Blue is Bloomberg and green is Refinitiv, and white is where they coincide in terms of the certain stakeholders of the market. And you do see this widespread in the ratings of the same companies when you assign ESG ratings. Why is this a problem? ESG today is used more and more to really commit companies to make a transition. And of course, there's also this a big issue for SMEs because companies with small ratings, low ratings, may have less access to financing. And high ESG rating may be attached to the companies who were able to produce nicely looking and well-developed plans of transition without any actual assessment of the emissions of such companies. And SME simply cannot produce such detailed and nice-looking plans, but this does not mean that those SMEs may have the same emissions as the large companies with the nice-looking illustrative plans. So OECD believes that such ESG ratings may not be fair, and they kick out the SMEs from the coverage. And the decision is quite logical. We need to compare the largest and most popular ESG methodologies to develop a single standard and ESG metrics, which would first of all show which of the environmental aspects in the operations of a company should be looked at by the investors, by the providers. Those painful points and how ESG providers need to disclose the methodologies. Most of the methodologies are closed and we don't see them, or we see only the tip of the iceberg without understanding whether what is important to an investor, how this or that ranking was produced, whether the company is going to be sustainable, play a big role in decarbonizing the economy. This is all that we do not understand. Another argument is that the ESG ratings should be linked to the long-term sustainability of companies, that is, with the financial stability and resilience of those companies. ESG indeed does not have a coordinated methodology, but separately we are looking at the E pillar, which is the least coordinated in terms of the quantitative or qualitative indicators and the questions that are being asked by the providers of the companies. And hence, E pillar is the most sensitive component of the ESG methodology. So what are the conclusions that we may draw by analyzing the main outcomes of ESG ratings? High scores also correlate to the high emissions, carbon emissions. Every third or fourth company with high ESG ratings has high carbon footprints. Also, we need to really compare the plans, but not so the actuals, and what is going to happen with the company into the future. This may be a nice-looking plan of carbon reduction, but you never assess what the company is doing today. What is the environmental damage that the company is generating today? And also, rating agencies, they're looking more at the corporate practices rather than the real influence and impact of the companies on the environment. You are looking at things like the quality of governance, etc., or management, and this is of priority and above the real impact of the company on the environment. The solutions, of course, you need to be ensuring higher transparency of the multi-level goal of environmental component. You need also to improve the transparency of methodology, and you need also to identify the clear borders of what components of the pillar are related to the operations of today and to the operations of the future. This is what we are looking at. This is what the investors are looking at in deciding how to manage the transition to the low carbon economy. The thing is that you don't have the methodologies, agreed methodologies of that. And we have about 12 taxonomies of sustainable financing now available internationally. Largest players and private players, they actually adopted a glossary and definitions of what they believe to be green projects and green bonds, the methodology of setting tariffs, etc., and including the Russian taxonomy, which is in that list. But we do have problems with those taxonomies. You don't define the exact indices or sectors that are fit for transition. You have some illustrative examples of technologies and sectors that comply with this transition, but there is no list of specific technologies that would ensure this seamless transition. And also really focusing on the operations with very low carbon emissions, like wind and other renewable sources of energies, and really not paying attention to the carbon intensive operations like coal or whatever, is a big mistake of the taxonomies available, because they should not give a preference to purely green projects, which is the easiest solution. Now, if you look across those 12 taxonomies, you can identify three main criteria of deciding whether a project is green or not. A sustainable, resilient project. It is not exactly a zero emission project, but it is that this project looking forward might be categorized as a zero emission project. You also need to have the project focused on the step-by-step reduction of emissions. Through which plans? This is the question. And third, you need to exclude a possibility when the implementation of this project would hamper the transition to green options and alternatives that might be available in the future. So these are the three criteria that we can be guided by in allocating green financing. Now, analyzing the 12 taxonomies, what can be common there? How people are looking at those transitional financing. Some of the approaches include not only the environmental guarantees, but also social guarantees in relation to this project to be financed. That is, you focus and believe it is important not only to those technologies, but it is also important to understand what you are going to do in terms of labor safety, human rights, a ban on the child labor, etc., and some other social guarantees. So such social guarantees are no less important than the environmental guarantees. Do not make excessive harm. Again, if you are talking about a green project, it does not mean that you really are free to harm the environment elsewhere. If you take Malaysia, Russia, Singapore, and the European Union, This is these are the countries which mention that in their taxonomies. People are talking about Paris agreements and sustainable development, but for the Japanese recent taxonomy, there's very little evidence and no mention of the trajectory of upgrading to a low carbon economy. So this process, this step-by-step guideline as to how companies and based on which criteria should ensure such transition. These guidelines are simply not available but for Japan. So we have the strategic goals, but we don't have any manual as to how to reach those strategic goals. Another important point is that you have some common sectors in those taxonomies in terms of this transition, like high efficiency, energy efficiency of buildings, low energy intensive metal industries, shipping and air transportation, etc. But there is a difference in the Russian taxonomy, which is about the higher efficiency of thermal power plants. And this is part of our environmental taxonomy, something that is lacking in other taxonomies. Now, in terms of Russia, again, directly, the Russian taxonomy does not reference this transitional financing. There is no direct mention of that, but it consists of two parts. There is a taxonomy for green projects and another taxonomy for adaptation projects, and they both actually include transition projects. It's not like a list of those projects like in the European taxonomy, which are fit for transition, but in every part of the Russian taxonomy you have those projects. So we also focus and are guided by the Paris Agreement, so that the green agenda should be one of our development goals, but the 8 green sectors and the 6 adaptation sectors, and you can see those on the slide, actually would be primarily evaluated in terms of their quantitative impact on the environment, so that we can decide whether to use the green instruments of financing with them. We believe that there's not much focus on the qualitative aspects of such transition. Rather, we're talking about the quantitative aspect in the Russian taxonomy. And all of that is linked to some regulations to avoid any excessive harm to the environment. While in the European taxonomy, there's no really much focus on legislation and regulations, but rather talking about some living standards like biodiversity, like human rights. So there you would see a broader interpretation than in the Russian taxonomy, which is based solely on legislation and regulations. Another difference between the Russian and the European taxonomies is that we more or less evaluate a specific asset or project of a company. We do not really evaluate the company as a whole. Doesn't matter how the company is behaving itself in the market, but if that company has a project which can be recognized as green or adaptation or adaptive project, that company would be fit for green financing, transitional finance. While in Europe, they're looking at the company as a whole. And there we can compare all these 12 taxonomies in individual areas. The Japanese taxonomy, for example, quite interestingly, is focused on the reduction of emissions, a very specific and narrow parameter and criteria. And if you look at the Russian taxonomy, the focus there is the improvement of the environment, less pollution, there's greenhouse emissions, energy efficiency, climate adaptation, etc. So this is a very broad focus of the projects. Whether it is good or bad, it's hard to say, but broader approach, to some extent, will not produce the effect that we actually aspire for in allocating green financing. In conclusion, I would say that despite the fact that those tools and instruments are available and that transitional financing is of more priority than green financing, still this transitional financing has some challenges. You need to have specific steps and paths and trajectories of how to reach that. Which are the specific actions and events of transition to decide whether a company is a transitional one or not, and how this is going to really evolve into a macro level policy, like deciding about a company as a whole. Another important point there is that the projects may be trans-border, and like I demonstrated, in some parts taxonomies coincide or differ, and the question of how to evaluate trans-border activities, this may be up to the individual countries to decide whether a trans-border project would be in line with the green or transitional project. Thank you, Antonina. I have a question. Those measures and actions proposed, already taken, are they linked to the carbon taxes? Well, as a matter of fact, if you look back in history, and in Europe, it all is linked to this big Green Deal. It is all interlinked and quite logically. Now, if you take the Russian practice, then we see that 2 years ago, the VB.RF with the Ministry of Economic Development started to develop this taxonomy, which was signed by the Prime Minister sometime in the 20th of September. And that is in terms of regulations, but emissions are kind of like held separately. So there is no direct link, even in terms of administration. All those chaotic movements started to be taken only in the spring of this year. The taxonomy was initiated much earlier. Well, the main focus there is about reporting. Now, if you take a look at the draft law on greenhouse gas emissions, it is very broad and it does not have any specific guidelines. The biggest problem of the taxonomy is that there is no trajectory to move to a lower carbon emissions. Of course, this peculiarity of Russia and this peculiarity of Europe would not make things moving too fast. But if you remember how the Russian taxonomy was initiated, it only included some green projects. Now it includes those adaptation projects. So the task is now broader, thank God. And we don't need really to fight for green projects only. We need to work with the companies to try to assess whether a company is really making an effort to transition. And then that company would be liable to such concessional financing. Colleagues, indeed, in our next presentation, we're going to go away a little bit from green financing and economy, but we will be talking about international trade. We saw what happened to international trade during the pandemic. We saw how the challenges of international trade may affect integration processes, which we discussed during our first session. And to discuss international trade, I would like to give the floor to Alexander Knobel, Director of International Economics and Finance of the Russian Academy of External Trade. I hope that you all can see my presentation. Yeah, thank you, Pavel, for this introduction. And indeed, green financing and green economy is something that we cannot really avoid in discussing international trade, because this is more or less like a red line which goes through all our life. And Without further ado, perhaps I will discuss with you international trade, how we see the development of international trade of today, and the current circumstances are quite peculiar and interesting. And it is with such a set of circumstances that the global economy and international trade had never faced before. You all know about the dynamics of international trade in 2020 with certain changes. In 2020, we saw the dropping GDP and trade, and primarily, if you talk international trade in goods and services, it was services that were hit hardest, and of course, mostly hit were travel of people across the countries. Transportation, of course, really had a big drop in Q2 of 2020 with some recovery later on, which is because international trade started also to recover. But generally speaking, if you really look at the projections and the history of projections, you would realize that those projections have always been more pessimistic than we witnessed actually. So this is WTO forecasts and the IMF and the World Bank forecasts were very similar. But none of those forecasts ever came true. Say the drop of international trade in physical volume terms was much less, was by a degree less than was presented in the pessimistic scenarios of IFIs before the pandemic or in the very beginning of the pandemic. Now, we are moving forward indeed, and we are making a progress. And already in Q1 of 2021, we received another projection about the 2021 trade outcome. But again, quite recently, it was also revised upwards, which means that we see that international trade is performing much better than expected by the IFIs. I should also say that the recovery of the global economy is going against the background of a commodity market rally, if you like, or race. You would see the appropriate pictures. On the right is the more or less 2021 from Bloomberg, and indeed we do see the growth in all the commodity prices. I should actually stop there to discuss those prices in Europe and the US because of the boom for country development and construction really resulted in the higher demand, and that is actually the people wanted to build their houses in the countryside just because of the pandemic, and that was the reason for this countryside construction boom. Just like in Russia, but maybe we don't have that high a share in construction to affect the global demands, but the European and the US demand really was a driving force. Metals and metal products, again, some deferred demand on that, natural gas, a whole gamut of reasons, like the low inventories of gas in Europe, and there are some limitations of proposal, and there's a high demand on gas in Asia for LNG and LPG, and coal, of course, high demand for coal generation to substitute more expensive gas. That is all, even despite the green agenda.
I'd like to note separately that the Chinese energy crisis per se cannot be viewed separately, and it impacts the international trade flows and the commodity prices. Well, this is because the energy mix of China is kind of gray. The lion's share belonging to coal. So coal accounts for a big proportion of the energy mix. This is why the price growth takes place. And there is some interest on the part of Russia, as they always used to be a major, a large buyer of the Australian coal. But now, because of the political differences, like this, Australia sides with the US in the trade war, and besides, Australia supported the stance on the COVID-19 investigation in an unfavorable way or tone for China. So this is why, hence, throughout 2020, China substituted the Australian coal with Russian coal, largely. And that increased the revenues of the exporters here. Nevertheless, still recently, we have seen the restart of the Australian coal supplies to China as the demand was growing and they had to sacrifice political considerations. So now we keep living in the context of trade wars that appeared in different spots of the planet, and now they have shrouded the whole of our Earth. And the pandemic not only reverted the trend towards the free trade pattern, on the contrary, it consolidated the trade restrictions and warfare on the part of the US, the European Union, and China against each other. Despite the change in the US administration, we have seen no liberalization of trade policies, and with some respects on some of the aspects of liberalizing trade that Trump had planned, Biden decided not to give way to that, including the restrictions against China, the countries. So China and the US concluded a trade pact that on the one hand may prompt that we are moving away from trade warfare, but actually it is another episode of a non-market solution to the trade-related problems in the global system. And despite the fact that the deal refers to the two countries only, well, it still impacts hundreds of billions of dollars worth of trade, and very many trade flows are affected. And with the adjustments for the pandemic, still those agreements, these accords, the deal is honored by the parties. Like China increased the buying American goods on the agreed positions, and the United States is now considering putting down the customs duties on some of the Chinese imports to the United States. And we have made some of the calculations and reckoned that the world has been paying around $80 billion in global GDP terms because of the trade wars. And those trade wars only partially resolved the issues that had been brought up by the Trump administration, and the trade balance wouldn't change a lot. On the non-market nature of the agreement between the US and China still provides some rebalancing of the trade deficit. And Russia's interest here is encroached upon because there are some of the commodities that we could supply to the American market, like soybeans and meat, meat substitutes, and all the goods refer to food, stuffs, and agriculture only. In machine engineering and high tech, we cannot compete with China. But you know, in those agricultural categories, that we could step up supplying. Now the Chinese buy more from the United States. So the global integration as of 2021 goes on. We have registered in the first half of the year a record number of the regional trade agreements, FTAs, and this is kind of deferred demand, backlog of demand, and now the United Kingdom, after their withdrawal from the EU, is actively concluding new deals with other countries to provide for similar, more or less the same terms of economic interaction that it had in the EU. So we can see that currently the UK has the lead with respect to new trade agreements, as they are now revisiting the previous versions of the pan-EU agreements that related to the UK as a member. So, well, apart from that, of late we have seen the development of 3 global projects: the comprehensive and progressive Trans-Pacific Partnership, comprehensive regional economic partnership, and African free trade area that is now underdeveloped, that is now downplayed rather little, because now African countries trade less than the rest of the world. But in the course of the African development, the African Free Trade Agreement, free trade area will be developing progressively. Well, again, in the context of the pandemic, we're seeing the upswing in other sectors, like the digital trade, and there is a separate investment agreement between China and the EU, and the deal between China and the United States that can be considered as a mini transaction that still impacts the rest of the world because of the huge amounts. And there has been a council established between the EU and the US on trading technologies, and countries imposed and introduced lots of new measures in the scope of the WTO. And India has always had the lead in these new measures. Currently, more than 300 measures related to goods like temporary export restrictions and import restrictions, and the goods and services measures have been put in place. Within the Eurasian Economic Union, we haven't seen too many new measures, 7 in total, and 1 on the duty-free imports of components and materials for medications is still in place. Others have expired. They worked in the course of 2020, and one could subdivide them into 2 parts. The separate components of goods, the non-equal good flows, and preventing the outflow of PPEs from the Eurasian Union. So the aspiration was to enhance the supply of the medications inside the Union so that they shouldn't flow away. And during the Eurasian integration, we have faced some difficulties and we have had some advances. Like we have been able to take coordinated joint action to prevent the outflow of goods that were necessary in the course of the pandemic, and we have simplified some of the access to some goods and categories. And the Eurasian Commission worked better than the European Commission, because the European Commission never got around to that. And with them it was rather recommendation. But still, we have seen some challenges. Also, the EAU countries haven't been able to agree upon a common green corridor or green channel for exports and imports. And the countries also impose barriers against one another, like the restrictions to export PPEs and food stuffs against third countries. We have been able to reach a balanced approach for the Eurasian space to be treated as a single market in all weathers. Definitely the carbon regulation is another phenomenon for international trade. This year it has been stepped up considerably and a lot has been said about that. Professor Kotlikov has dwelt on that at length, and I will not repeat what has been said before. I'll only tell you that the scale of this is hard to overrate. And the CO2 emission futures keep growing several-fold over the past years.
Yeah.
And the carbon regulation touch upon a wide range of goods and commodities and provide and bring in a great deal of uncertainty for the forthcoming 10 to 15 years. And if we speak about the Russian export, like that will have an impact worth $7 to $8 billion per annum with respect to the transport regulation. If we talk about the Eurasian Union, once again, I want to note that there is no single, no common position of the members on the carbon regulation. We all have acceded to the ENFCCC, and the most comprehensive framework is now in place in Kazakhstan. The trade in quotas is allowed there. In Armenia and Kyrgyzstan, they want to improve the structure of the energy mix. And in Russia, quoting is still tentative, is pilot and experimental. And we only see pilot projects in place at this point. So it's tentative. In closing, I want to take stock of all the points in my presentation first. It must be noted that despite all the difficulties, the actual situation is much better than what had been projected by international institutions. The rapid growth of commodity prices starting from gas and up to coal may lead to an energy crisis and disrupted supplies. And the still unresolved goals are numerous, and the crisis of the multilateralism is with us, and something must be done about the WTO, and the countries resort more and more to non-market based practices, which are in counter to the spirit of the WTO. And the pace of concluding those non-market based deals wouldn't go down. And we're seeing a lot of regional FTAs that have reached 350. There are several global projects like Trans-Pacific Partnership and African Zone and others. And we would really like these agreements not to close the supply chains, but help move goods across the borders. Countries keep applying a great deal of trade restrictions, although the peak of the pandemic is past, and that is going to be inertia-driven, and the restrictions will not be repealed easily and quickly. And integration groups also took some measures to provide for their security, like the Eurasian Commission was quite efficient here, and the carbon neutrality is high on the agenda. On the 14th of July, the Transborder Carbon Scheme was made public, and probably that is going to include quantitative parameters and inputs that will help assess that the impact thereof for countries in Russia. And the Eurasian Economic Union is still unprepared to pursue carbon regulation, with members having different approaches to that. And unfortunately, the European Commission hasn't looked into that in an in-depth manner. Thank you. That brings me to the end of presentation. Thank you, Alexander. After your intervention, I have a major global question. During the first session, we talked the prospects of the global economic growth after the pandemic, and we spoke about different factors, including benefits and drags, but the international trade starting from 1990s was one of the economic growth drivers, allowing many countries to keep growing rapidly and catch up, at least partially, with the advanced economies. How do you think in the forthcoming 5 to 10 years whether trade will remain this driver, or probably we know that now there has been a slowdown in the global trade, and whether you think its importance will go down considerably? Thank you for the question. Well, I think indeed its importance will go down, will be reduced considerably. What we saw starting from 1980 to the end of the to the start of the global downturn, that was a whopping pace of growth atop the global GDP growth. And now we can infer that the international trade was a driver. And thanks to the global added value chains and placing manufacturing in different countries, mostly in China and Southeast Asia, like unless there is another China emerging, and which is unlikely to happen. So such a global shift of manufacturing and a global upheaval in the economic distribution will not happen. And many corporates are now leaving the Southeast Asia as these nations are losing their cheap labor advantage. And I think that currently and in future, the goal of the global international trade regulation should seek to preserve the current share of the global trade in the global GDP. And we also should seek a reduction in the protectionist practices that are detrimental to the global economic growth rather than propitious to that. Same refers to the global carbon regulation. Currently, in other words, the goal of the global regulators would be to make the international trade one of the economic drivers that would help maintain the current pace of global economic development. And for that, we need to fine-tune the WTO, and we also need to carefully resolve the transborder carbon adjustments and measures. Thank you, colleagues. Now we'll have the last but not least presentation related to the financial sector with the decentralized financing platforms. We have seen that platforms have acquired a lot of importance during the pandemic, and I would invite Alexander Isakov, Chief Economist for Russia of the VTB Capital, to take the floor. Afternoon, hello colleagues. I'd like to thank you for the invitation and would like to share our view. I'll tell you in a nutshell that it is a brand new issue, and I will share my perspective on that. That is informed by my bank vision. So I'm interested how this sector will impact the banking business of ours, but when I thought about the invitation from Paul, I tried to figure what audience I might face and what I could add to their knowledge. Probably my intervention will be a call to you once you, in case you consider banks to be a stream, a flow stream, or probably you would be more interested in DeFi or other segments. So in a nutshell, I will tell you what my position is. Paul has introduced me, but for you to have a better knowledge of my background, I'll tell you that I've been doing macroeconomics at VTB Capital. We've been catering to institutional investors. Look me up at Google Scholar or GitHub. We post very many things of ours, computational models and other stuff. So we are close to the new economic model. So what shall be the gist of this presentation? I'll tell you first a quick word on the motivation. Why one should start thinking about the DeFi in the context of the financial sector, both theory and practice. Then I'll give a brief introduction to DeFi. DeFi is not a physical constant or value. It is a socioeconomic notion, and it's up to us to decide what shall fit in that. It's not measured by meters or devices or instruments. And I'll tell you how the banking sector may respond directly or indirectly to the DeFi challenge. And the challenge of time that brought DeFi into existence. So well, why is it worth thinking about how the distributed finance, to what extent it's important? So conceptually, we are not fully aware of long-term after effects of the technological development. That may sound as a self-explanatory thing, but you know, the recent studies show how technologies bring about the effects that no one expected or anticipated. Just look at the Brandstedt et al. Paper. He has demonstrated how the geographical distribution of manufacturing impacts the prevalence of patents in national states. If the manufacturing sites are far away, the patents are of different kind, and social media may compete with kind of local newspapers and radicalize policies, including local policies. This is the derail of our paper. Gorton 10 years ago helped analyze how innovation impacted our sphere and speaks about great instability that brought about the 28 to 2010 recession. So thinking about technological advancement is kind of a good thing, but you know, they are better seen and visible over time. But now, with respect to DeFi Pulse, it has been growing rapidly. For each of the sectors, there are some metrics to see whether this or that value is big or not in the DeFi. We will take into consideration the amount of allotted resources, which is the size of the amount of collateral supporting the contracts, level of collateral. So the DeFi Pulse is the aggregator, and it shows that 3.5 years ago it was at 0, and now it has increased to 90 billion USD of collateral. And it is a growing value. People look at the distributed finance and recall the Great Recession, and I'm not saying that they are right, but part of this sector interpret the experience of the Grand Recession as as the inefficiency of the centralized market structure.
Очень крупные такие финансовые организации, такие как биржи, там.
Relying on such big institutions as exchanges, depositories, and intermediaries. This is not the only way to analyze recessions. If you take the popular way of analyzing DeFi, then you can take the reverse approach that the distributed nature of transactions beyond the exchange did not allow us to see the concentration of risks and the transition to the counterparties or exchanges as the consolidated instruments would be a solution. At least some think that. Another phenomenon is the rethinking of a large community of investors in the markets that face regulation. Our financial market is built on regulation, so probably it's one of the most regulated areas of our life as a society, and the people start realizing that regulation is cumbersome, and the property rights, when you can do something, do not look very transparent, and people think, let's start from the scratch and try to write it up from the scratch, write the full code of how it should work from the very beginning. And this is about our motivation, why people really are thinking about distributed finance. A couple of words about what it is. Well, in general, the DeFi is the main component there, is that as the foundation. Well, you can think of this as a database, and this base for data about transactions about who owns what would be transactions, accounts, balances, and third, in an abstract way, all our arrangements, and all of that is put into blockchain. All our smart contracts well, all our arrangements are in the form of a smart contract, and all of that is kept or maintained in blockchain. And this is the way our financial application is driven. So this is the blockchain, everything is recorded, and anything related to finance, almost anything. I mean, you have applications that help you pay, take a loan, or do anything like get an insurance policy, or you can transact in some simple derivatives like swaps and options, but with certain peculiarities or specifics. And let me come to that. First, it is permissionless, that is, without permissions. But the physical absence of permissions means that you see everything without any permissions. You see the balances of all other participants, and you don't need to have any identification. You don't need to prove who you are or what you are to get access to transactions. You don't have things like depositories because there's no institution that is construed in a special way to provide security and safety. This is a distributed knowledge across all those who keep files, blockchain files. Then the fourth characteristic is minimum trust, or the need of such trust. So all transactions are more or less conducted in an atomic way. You have some deferred transactions, or when you are supposed to deliver something and deliver a financial instrument, and then you get something in return. Here, you more or less either transact or not transact in full. That's why you minimize trust. And fourth is, since unlike in the real world, you do not have any letter of law, so to say, you only have a letter of code or a symbol of code, all your transactions may be overlapped. You can issue other functions of your assets. For example, you purchased one token of a currency which can be associated with an instrument which will then be maybe insured, etc. So you are thinking about this not as of traditional assets, but as of code. And two things that are constructed in a different way than, say, traditional ways. In this way, lending is DeFi lending is quite different from traditional lending. It is without any collateral or security, or you pledge less than usually for a loan. So in such finance, lending is built on the idea of excessive security. Usually, your collateral is by a third higher than your loan, and you're not assessed for risks. There are flash loans in DeFi without any security or collateral, and they work in a way that they usually are for this isolated world of crypto assets. But if you're not making the final full payment and you default on your debt, then all the previous transactions actually are reversed and are considered to be invalid. So it looks nicely, but there is a risk. The risk is that it is not always that you can transact in full, because all your transactions can be reversed, but you can also take your transactions to take another loan, and the price moved and the liquidity is not full and you defaulted. You can more or less insure another event. People did that, and since you don't have any identity there, there's no thing there like a credit history in this world. So this is more like sports there. Personal data, that is quite understandable. Identification is done by the providers of financial services, and personal data are protected by law. So they are kept only as long as needed, and they are deleted and when not needed, and they are visible only to those on the needs basis. And the identity in general is not required, and the transactions and account balances are a public domain, so to say. So, for example, if Pavel pays me a cent, I know the address of that wallet that was used to pay, and I see all the history of the transactions and all the balances there. That's the way. This world is indeed more interesting than you would initially think. So some trans-border payments they're quite obvious. Now, briefly about banking, how banking is adapting to the challenges of DeFi. First of all, we need to progress towards more simplification and openness of banking. We now have new technologies as like bankless service, where in essence you can use a bank digital analog of a balance for your servers. But I liked a recent research into open banking. This is an initiative of a number of central banks to open the API to some third-party developers to build interfaces and to communicate with the bank's products in a more comfortable way. So if there is a value behind that, you can make money on that. You can take a look at the strategy of the Bank of Russia for that. So we are moving that. Higher transparency is, like I said, part of the incentive behind DeFi is that people come to the market, and this is all about regulation in that market. But here, in this particular world, the sector is supporting all kinds of financial literacy so that people really know about the nature of the products. Digitalization, third point, DeFi would not require of you to go to an office of sorts or to a branch. It is fully digital, and you are talking about some digital access, etc. And asymmetric response, you really cut down the cost of settlements, and you also support exchange of information. Three nice pictures for you. At the end, today in the morning, I made a screenshot of the MetaMask application, which helps you, it's a DeFi application, which helps you convert currencies from one currency to another currency, from fiat to crypto, etc. And you can see the size of the calculation and the fees, and for example, to convert 500 pounds into Ethereum, you would pay 6.7% in commission. Quite a lot. Now, regarding transparency, this is a screenshot from the simplest tutorial to write smart contracts in Python. This is the simplest language to be used, which I ever found. This is a small piece of that smart contract. This is, again, the simplest, a very simple, basic description of a smart contract, talking about transparency. This is a special kind of transparency. It is not your, rank and file and household transparency that everything is defined and quite understandable. No, this transparency requires some serious coding background. And the third screenshot is about how smart contracts link to the real world. Just for your understanding, the DeFi world is indeed quite operational within itself. For example, if you take a smart contract and it is linked to something else, like the price of Ethereum, or say payments to the employees, and everything works nicely. But when the functions go beyond this ecosystem, you would immediately see challenges. Just example, to take data. If you, for example, you take a derivative for another indicator, you need to have an independent source of data for that derivative. And so far, this is not simple. This is called Oracle in our language, an oracle that may predict the numbers and helps you track information. But this is a big question. and you need to manipulate the numbers that are coming into this closed system. And sometimes we're talking about abuse of such data. So my brief conclusion is that competition from new players for the banking sector is growing. That is understandable. But the most interesting part of this whole story is to really try to understand the motivation for innovation. So why those innovations grow, what is the driver behind, what is the internal source of such innovations, and hence you need to move into that direction. Also, you need to be more realistic about the current state of DeFi, and in this sense, I don't think that your personal touch would not be replaced. You can install any application, you try to send the money to someone or try to buy something with that application, and you will see this phenomenon. Nothing replaces human touch. Thank you indeed. One point there from your presentation, I simply did not understand your attitude to that. Do you believe that that this would not have much prospects and would not be a threat to traditional banking, or will there be such threats? I believe that, well, hard to guess indeed, but I believe that now think about what is happening right now. The whole financial sector in the last 10 years has lived in a world of slowly digesting and overcoming the sad experience of 2008, 2009, which really revolutionized the way the sector is regulated. Remember the size of the narrative and detailed regulation of all risks of all kinds and types. And that's how much it takes. The way DeFi looks like today is this attempt to rewrite the whole story without regulation, to try to isolate some functionality of the banking sector, of the financial sector, like, for example, wire transfers of money and something else, and build it next to the traditional market, but without regulation. This is an attempt, quite a positive one, a quite decent one, as I believe, and banks really should try their hand at that themselves. They perhaps may try to come up with some of their functions and functionalities from the scratch. But look, not to boast, but it is very expensive. So far, the costs of doing so are prohibitive. You would not be using that application to send money to somebody else just to save money. Now you can use traditional banking to send money by wire without any cost. And here, as I showed to you, the costs are very high. And there you also need to be talking about the scaling effect. Of course, when scaled up, it would have lower costs. But now it is quite difficult, or will be difficult to do. Generally speaking, I do understand the idea. I just wanted to really see your personal attitude to that. And the truth is, indeed, I agree with you that so far it is some difficult road that we need to take. Very few people actually ever faced and used those tools and instruments, which complicates the story even more. I believe that the researchers that we have here online need really to be in the front line, try to install all the applications and try to use them. And this is something which is best than reading an Acrobat file. It is learning by doing. Indeed. Thank you for your contribution. Colleagues, I would like to thank all the speakers today for their participation and the presentations, very different ones, but very informative. I thank you all, and I hope to see you sometime in future. Thank you and good luck.